What if I told you that one of the biggest financial events of our lifetime is happening right now, and most people have absolutely no idea? Silver just hit levels we haven't seen in decades. Major banks are quietly stockpiling physical silver by the hundreds of millions of ounces. And some of the world's top analysts are predicting prices that sound almost impossible. Stay with me, because by the end of this video, you're going to understand exactly what's happening, why it matters, and what you need to know whether you're a complete beginner or a seasoned investor. Let's get into it. Quick reminder before we dive in. Everything we talk about here is for educational purposes only. I'm sharing my personal analysis, but this is not financial advice. Always do your own research. Welcome back to the channel. If you're new here, we break down complex financial markets into plain English so you can make smarter decisions. Hit that subscribe button and like the video. Before we dive into the wild stuff happening right now, let's make sure we're all on the same page. Silver isn't just a shiny metal you see in jewelry. It's one of the most industrially important materials on the planet. It's used in solar panels, electric vehicles, smartphones, medical equipment, basically everything that makes modern life work. And here's the thing that most people miss. Silver serves two roles at the same time. Role number one, it's an industrial metal. Factories need it. Tech companies need it. The green energy revolution runs on it. Role number two, it's a store of value. Just like gold, people have used silver as money and as a wealth protector for thousands of years. That dual role is exactly why what's happening right now is so significant. When both of those forces push in the same direction at the same time, prices move, and they move fast. So let's talk about where silver is right now. Where silver stands today. As of today, March 14th, 2026, silver is trading around $80 per ounce. Now, before you say that sounds expensive, let me put that into perspective for you. Just 1 year ago, silver was trading around $33 per ounce. That means silver is up over 138% in a single year. That's not a typo. 138%. And earlier this year, in January 2026, silver hit an all-time high of $121 per ounce. Now we're in a bit of a pullback. Silver dropped around 3.9% recently, and over the past week, it's down roughly 3.5%. So yes, we're off the highs. But here's what's important to understand. Pullbacks in a strong bull market are normal. And what's driving this particular dip actually has nothing to do with silver's fundamentals being weak. So what is causing the dip? Why is silver dropping right now? There are two main reasons, and they're connected. Reason number one, the US dollar is getting stronger. Now, silver and the dollar have what's called an inverse relationship. When the dollar goes up, silver tends to go down. Why? Because silver is priced in dollars. When the dollar strengthens, it takes fewer dollars to buy the same amount of silver, so the price drops. And right now, the dollar is surging because investors are betting that the Federal Reserve, that's America's central bank, won't be cutting interest rates anytime soon. High interest rates make the dollar more attractive. More demand for dollars means a stronger dollar, which puts pressure on silver. Reason number two, geopolitical tensions are creating mixed signals. There's significant conflict in the Middle East right now, including US military action near the Strait of Hormuz, a critical shipping lane for global oil. This has pushed oil prices above $100 a barrel. Normally, this kind of global uncertainty would push people into silver as a safe haven, and it does create some demand. But the stronger dollar is currently winning that tug of war. So we have a short-term price drop. But the long-term story? That's where things get really interesting. The big banks are making a huge move. Alright, this is the part of the video I really want you to pay attention to. There's something happening on a market called Comex. That stands for Commodity Exchange. It's essentially the New York-based marketplace where silver futures are traded. Think of it like a giant auction house for silver contracts. And right now, One institution is dominating that market in a way that's turning heads across the entire financial world. JPMorgan Chase. JPMorgan currently controls approximately 44% of all silver stored at Comex. That's roughly 152 million ounces, and they're actively taking more physical delivery every single month. Here's why this is a big deal. In the past, JPMorgan was famous for holding massive short positions, essentially betting that silver prices would go down. But in late 2025, they began closing out those short positions. And now, in 2026, they flipped completely. They're taking physical delivery aggressively. They're on the buy side. In the March 2026 delivery cycle alone, JPMorgan has stopped, meaning accepted delivery of hundreds of thousands of ounces of physical silver. Think about what that means. When one of the world's most powerful banks goes from betting against silver to hoarding it, you have to ask yourself, what do they know that the average person doesn't? And they're not alone. Bank of America's top metals analyst has a price target of $309 per ounce for silver by end of 2026. That's their bull case. Citigroup is calling for $100 per ounce as early as this quarter. Deutsche Bank is eyeing $100 as well. These aren't random internet predictions. These are the biggest financial institutions on the planet. The supply problem nobody is talking about. Let's zoom out and look at the bigger picture. Because the real story behind silver's massive rise isn't just about banks and trading strategies. It's about supply and demand. Here's a simple way to think about it. The world is using more silver every year for solar panels, for electric vehicles, for electronics. Global demand for silver in industrial applications is growing at a pace we've never seen before. But here's the problem. We're not producing enough new silver to keep up. This creates what's called a supply deficit. More silver is being consumed than is being mined. Analysts estimate the global silver deficit is around 200 million ounces per year right now, and it's showing up in the storage data. Comex silver inventories, the amount of registered, deliverable silver sitting in approved U.S. vaults, have fallen 31% since October 2025. Meanwhile, in China, the Shanghai Exchange is seeing premiums of 14 to 15% on silver prices. Indian demand is surging. The metal is physically moving eastward, out of Western markets. Over 340 million ounces of silver have left Western vaults since 2021. Let that sink in. What are analysts predicting? So let's talk about price targets, because this is probably what you came here for. Here's a quick rundown of where major institutions see silver going. JPMorgan, $81 average for 2026, with a Q1 target of $84. Citigroup, $100 by end of Q1, $110 by Q2. Deutsche Bank, around $100. Bank of America, $135 base case, up to $309 in their bull scenario. Gold-silver analysts, $175 or higher, citing deepening supply deficits. Trading economics consensus, $83.94 by end of Q1, with 12-month targets near $100. Now, there are also more extreme predictions floating around, some calling for $300 or even higher. But those are on the far end of the spectrum and should be taken with appropriate caution. The middle ground consensus from credible institutions, silver reaching triple digits in 2026, is a genuine possibility, not just wishful thinking. A quick history lesson. Has this happened before? Now you might be wondering, okay, this all sounds exciting, but has anything like this ever happened before? Great question. And the answer is yes, a few times actually. The most famous case is the Hunt Brothers Silver Corner in 1979 and 1980. Two Texas billionaires, Nelson and William Hunt, started quietly buying up massive amounts of physical silver. They accumulated around 200 million ounces, depleting U.S. inventories. Silver went from $6 per ounce all the way to $50 per ounce in just over a year. That's an 800% gain. But then the exchange raised margin requirements, forced position limits, and the price crashed 50% in a single day, known as Silver Thursday. The brothers lost over $1 billion and eventually went bankrupt. More recently, in January 2021, the Reddit crowd, the same group that sent GameStop to the moon, tried to orchestrate a silver short squeeze. Silver jumped about 20%, but the effort fizzled out relatively quickly. The key lesson from history? These events almost always involve a combination of physical supply stress, large speculative positions, and demand that overwhelms the system. And right now, in early 2026, market watchers are drawing parallels to those earlier episodes, only this time, it's not retail traders driving it. It's institutional money. What are the risks? Look, we always want to be honest here. It's not all upside. There are real risks you need to know about. Risk number 1, dollar strength. If the US dollar continues to rise, and right now there are reasons it might, that creates consistent headwinds for silver prices in the short term. Risk number 2, economic slowdown. US GDP in Q4 2025 came in at just 0.7%. If the global economy weakens, industrial demand for silver could soften, which takes pressure off that supply deficit. Risk number 3, market manipulation concerns. There are ongoing discussions in the financial community about whether large institutions are using their dominant positions to influence prices. This is a genuine debate, not just internet conspiracy. It's been investigated by regulatory bodies before. Risk number 4, speculative bubbles. When prices rise this fast, speculative money often floods in, driving prices beyond what fundamentals justify. That creates volatility, and sharp corrections are always possible. So always do your own research, understand your risk tolerance, and never invest money you can't afford to lose. This video is purely educational, not financial advice. What should you be watching? Whether you're an investor or just someone trying to understand what's going on in the world, here are the key things to watch over the coming weeks and months. Number 1, Comex delivery data. When the number of people demanding physical silver delivery approaches or exceeds the amount of available registered silver, that's when things can get very volatile, very fast. Number 2, the US dollar index. If the dollar starts to weaken, perhaps because the Fed signals rate cuts, that could be rocket fuel for silver prices. Number 3, the CFTC Bank Participation Report, which comes out monthly. This shows you what the big banks are actually doing with their positions. Are they building more longs or covering shorts? Number 4, industrial demand signals. Watch electric vehicle production numbers, solar panel installation data, and semiconductor manufacturing trends. These tell you the real-world demand picture. The silver market in 2026 is unlike anything we've seen in a generation. You have a structural supply deficit, surging industrial demand, major banks accumulating physical metal, and a price that's already up over 138% in a year, with credible forecasts pointing significantly higher. Whether you're a first-time investor trying to understand this space, or you're already in the market trying to make sense of the volatility, I hope this video gave you a clearer picture. If you found this valuable, smash that like button. It genuinely helps more people find this content. Subscribe so you don't miss our next deep dive, and drop a comment below. What's your silver price prediction for end of 2026? I read every single one.